Hey guys, welcome back. In today's video, I'm going to share with you how I made $935 in a single trading day. Today, I'm going to share with you my thinking framework and I hope that it helps you. Okay, let's begin. Now, the situation here is this. If you haven't checked out my previous video, I have made $2,300 in a single day and shortly after, and in the next trading day, I have made $935 in a single day. And I did not have time to make a video shortly afterwards. And this video will be posted a few days after $2,300 a day profit in a single trading day. Okay, so what I did here after being bullish on the stock market is that I quickly went and studied more about the markets. And I came to realize that fundamentally there is something very wrong about the market. If you look back in 1999, 2008, 2021, right? Everything that went wrong was because of leverage, right? Highly leveraged market is what is going to cause a 50% drawdown during 1999, 2008, 2021. 1999 to 2000s, you experienced the dot-com bubble. 2008, the subprime mortgage. 2021, quantitative easing. They were just printing money, lowering interest rate, pumping the economy with cheap credit, and you make the money velocity fast, valuations go crazy. Okay, so what happened now is that after I think deeper and in second and third order, I realized that this Japanese yen carry trade might cause a global margin call in the sense that it is no different to if you were to study the previous financial crises. It all ends down to highly leveraged market. Money that was borrowed in credit invested into the market, causing sky-high valuations. If you were to look at the AI hype causing the market to go so crazy in terms of valuation, it might not be the AI hype. It might be because of Japanese yen. The Japanese yen was so cheap, so weak, and the interest rate is so low that people are borrowing a lot of Japanese yen and converting it into USD assets. And they keep repeating this cycle and keep buying up USD assets, causing the valuation to go so high. And after the correction shortly, the market went crazy and started surging immediately. So in my case, I think something is wrong. I think they are sucking the dumb money in, sucking retail investors in before we have a major credit crisis. And therefore, I quickly changed my thesis even though I'm very bullish on Tesla. But as a trader, you must be quick to adapt. So what I did here before the market surges is that I bought 2 lots of Tesla put option with a strike price of 205, expiration date of 2024, September 13, with an option premium of $9.35. And now let's recap back what is a put option. So when I buy a put option, it's basically I am bearish on the stock or the market. I use lesser amount of money to have the right to sell bigger exposure of shares. Like basically Michael Burry style. The cons is that the down payment will become $0 if I am wrong on the price and the date and I let it expire worthless. Now the pros is that there is theoretically unlimited upside for a limited downside because I only pay for a down payment, so the downside is limited. I only pay for a portion to get bigger exposure of shares. So to make this video, I went to Perplexity to share with him my trade, to ask the AI to help me analyze my trade so that I can better teach you guys, right? So for these 2 Tesla put option contract, I managed to close them at a profit. I sold them for $13.10 each in the next following day after the sharp decline. So since 2 lot of this trade is 200 shares, the profit I make will be the difference of $13.10 each share minus $9.35 each share, and I managed to profit $3.55 each share times 200 share, which is $710 and if you convert $710, it will be 935 SGD. So I made 935 SGD with just buying 2 Tesla put option. So again, Perplexity analyzed that I changed my thesis quickly because of my understanding of macro sentiments that thinks that the Japanese yen carry trade may trigger a global margin call, and he's on the short side for now. Now he thinks that smart money are drawing retail investor in before a huge meltdown. He thinks that this is a high probable outcome, and that's why he went short, even though in the long term, I am bullish on Tesla. Now, he still doesn't mind owning Tesla shares. He did a buy put on Tesla stock this time round to get profits so that he can use the profits to buy cheaper shares. Now, if you were to count my cost of capital, right, my cost of capital to earn 935 SGD or 710 USD is that I paid 955 US dollar times 2, which is somewhere slightly lesser than 2K US dollar, and I managed to make 710 US dollar. So that I made 35% upside in one single trading day. And that is the power of options if you see things clearly. Perplexity analyzed my trade further. So that the trade overview is that for Southpaw Chat or Singhai is that the market sentiment shift. So after his bullish trade on Tesla, Singhai quickly reassessed the market conditions. He believed that the unwinding of the Japanese yen carry trade could trigger a global margin call, leading to a broader market downturn. This prompted him to adopt a bearish stance on Tesla. So what he did was he buy put options. Singhai bought 2 put options on Tesla. The strike price was set at $205. The options were set to expire at September 13, 2024. Premium paid. He paid a premium of $9.55 per option contract So times 200 shares, that is what I paid for, slightly less than 2k US dollars. So he further analyzed that the trade execution, the rationale on buying puts. Singhai anticipated that Tesla stocks would decline due to macroeconomic pressures and the potential for market volatility. By purchasing put options, he positioned himself to a profit from a decrease in Tesla stock price. Now the following day is that Tesla stock price experienced a sharp decline, validating Singhai's bearish outlook. So selling price, he closed both put option contract at $13.10 each. Total revenue from sale, 2 contract times $13.10 equals to $26.20 per share. Since each contract represents 100 share, the total closing value was 2620 times 100 equals to 2,620 US dollars. The profit calculation, initial investment, total cost of buying the put option, 2 contract times 955 equals to $19.10 per share. Total initial investment, $19.10 times 100 equals 1,910 US dollar. 2620 minus 1910 equals 710 US dollar. Perplexity further analyzed my strategy insight. He says, and I quote, understanding macro sentiments. Singhai's decision to go short was influenced by his belief that smart money was manipulating market conditions, drawing retail investors in before a potential market meltdown. He perceived this as a high probable scenario. Now, the long-term perspective. Despite his short-term bearish position, Singhai expressed his willingness to own Tesla share in the long term. He viewed the put option as a way to profit from the expected decline, allowing him to potentially buy shares at a lower price later. The profit from this trade would enable him to acquire Tesla shares at a more favorable price if the stock continued to decline. Okay, so to be transparent here, not everything is sunshine and rainbow. I still remain my bearish stance and I opened 2 Nvidia put option to short Nvidia. But shortly after I closed Tesla trade and opened Nvidia put option, both Nvidia and Tesla actually shot up like crazy. To me, they are sucking dumb money in and I failed to make this trade. So this Nvidia put option is still ongoing. If I'm not wrong, I have an expiration date of September 28 and their earnings call is August 28. So this trade is still ongoing and I seem to have lost the profit I have made for this Tesla trade and I have not closed the position. So let's assume that this will be a loss and I will try to preserve capital. I will try to stop loss at a good price and I will look forward to shorting Nvidia at a right price. So today I want to share with you the emotional aspects of trading, and actually today this will be the main takeaway. So in trading you have to understand something called momentum. So these past few days I'm on a winning streak, so I have been going hard on trading. When you're on an upward spiral, you just keep going, and for me things turn out pretty well. But once you have a loss, you start doubting yourself, and it is okay to actually take a break from trading and do other things, right? There are life outside trading, and for me, after years of trading, how I cope with it is that I learned how to prioritize my mental state. And based on my experience, a strong body equals to a strong mind. And so I will exercise regularly, I will go to the gym, I'll hit the gym, take a break from trading and doing content, doing sales call, calling out my clients to make a sale. What I'm really trying to do is to get back the winning momentum. It is important to have small wins that stack up to the big wins. And every time you have your down season, right, you try to make a down season short. And you try to make the good season long. And over time, things compound. The good things will compound more. And because you let your down season to be short, they will compound. The net profit will compound. So I think today that's the main takeaway, right? To ensure that your emotional aspect, your mental state is the best when you are trading. Say for example, if you can bench 100 kg, then nothing else matters. Like all this trading feels like a small task. You have to be confident in yourself when you trade. So I think the emotional aspect, confidence is key. No matter what, confidence is key. And another aspect of how you remain confident is also assessing your trade plan, right? Before you execute a trade, you should have a trade plan. Understand why you key in that trade and what if things go wrong, what should you do? You follow the trade plan and don't be emotional about it. In trading, it is a zero-sum game. No value is really created. So it is really player versus player, right? If you keep yourself more confident, your mental state is better. There will be someone that has a weaker mental state, wrong decision, emotional. In this game of hundreds of millions of dollars, everybody have different stance, right? So you have to be more confident, physically stronger, mentally stronger. So I think that's my advice. Stack your winning momentum, let your downtime be low, compound it. And it is the same for business, same for trading, same for anything in life, right? And back to the markets. So for the foreseeable future, I think there is going to be a lot of volatility, which makes it good for trading. And I think they're out there to kill the bears and the bulls, so we have to be very careful on which side you want to take. I personally believe this Japanese yen carry trade is not so simple. Things are highly leveraged now, and it might cause a situation like the subprime mortgage because of leverage. I will link a report of what I have read that leads me to this conclusion. I'll link it down below on the description box. So for those who don't know, I have created the Options Playbook. This playbook consists 10 years of my trading experience. What I'm trying to do is I'm trying to squeeze $5,000 worth of knowledge into this playbook that I charge a fraction of it. And currently, I'm rewarding the early buyers and I'm slowly increasing the price. For this playbook, I will slowly add on more and more knowledge. And people that purchase and get it early will get this cheap and they will get a constant update of this Options Playbook. Okay, so if you want to support me for my years of work, sharing my knowledge for free, you can just check it out. I'll link the link down below in the description box and the comment section. Okay, with that, I hope you like this video. If you like this video, give it a thumbs up, subscribe if you haven't. Thank you and I'll see you next week.